Knock, knock.
Who's there?
Gen Z.
Gen Z who?
Hold on. Let me ask ChatGPT who I am. Welcome aboard, Mike, to the Bits and Banks podcast. Today, I have Mike, Chief Lending Officer at Bridge Credit Union. Mike started in the industry in 2007 as a receptionist and has made his way into the C-suite with deep roots in mortgage lending and credit union operations. Mike, the theme of the podcast today is fast enough to compete, human enough to matter. And the theme here really dwells into how small and mid-sized credit unions can embrace AI and automation without losing one thing that makes them unique, the personal touch. So this is a very relevant conversation for credit unions that are, let's say, sub 1 to 1.5 billion. How do they stay relevant? How do they serve their communities and prosper and thrive in a increasingly competitive financial services landscape? Thanks for joining the podcast.
Thanks for having me. I really appreciate it.
Let's jump right in. The first question is really around the relevance. So, Mike, you've been in the credit union movement since 2007. In that time, fintechs have gone from like a curiosity on the fringe to something that is a genuine threat or a co-optation, depending on how and who it is. So how does a small credit union actually stay relevant and, most important, survive with its customers or its members in this evolving space, which has large institutions, community banks, and also fintechs?
I think the biggest mistake we can make as credit unions right now is believing that the relevancy of the credit union comes from technology. Technology absolutely matters. Members are looking for speed, simplicity, trust, guidance from someone who understands their situation. So when you try to compare that, or when they're trying to compare us, they're comparing us to every experience that they have. So it's not just other credit unions, right? They're comparing us to Amazon, to Apple, the instant approvals that they get, the convenience digitally that they have. So we can't hide behind relationship banking anymore because that's slow, it's inefficient. So, to stay relevant, we have to use that technology to remove the friction that's between us and the member.
Yeah.
And of course, we want to make sure we do that by giving them quick decisions when that answer is pretty straightforward, right? You have your members with great credit that you should be able to decision very quickly. But when it gets complicated for someone, it's hardship, first-time home buyer, business lending, they should still be able to sit down with somebody who can think critically about that situation and help. So the credit union belief of the relationships still matters, but it's how we can balance that.
I think so. I think it's almost like the new age of relationship where the blend of traditional, which is kind of the ethos and the North Star for credit union, can blend with efficiency and automation from tech. And it's pretty critical to get that blend right. If it's too skewed on one end, it becomes inefficient. If it's too skewed on the other end, it becomes impersonal, right? So, and that's kind of where we are at, right?
It becomes transactional, right?
Transactional, yeah.
Transactional process.
Leads right into the second question, the automation question. So you mentioned when we were prepping for the podcast that you have a blend model of both kind of instant decisioning and also a relationship-based model running side by side. So as we think about the blend of where the machine stops and the human begins, what happens when you get that line wrong? And maybe I'll leave that to you as in your answer, but you could take a couple of hypothetical scenarios and say, this is how a blend would work versus just being completely machine driven. So that, this would be very good practical advice for the smaller credit unions.
Right. And it goes back to, and I think it may be a common theme in our conversation is what's the balance there?
That's right.
There are members and loan applications that are very straightforward. And those are the ones that need those quick decisions. And like we had talked about, there's a moment there where if you're not handling this application or making that decision quick enough, they can go out into the parking lot, apply online, and get it on their phone. We have the world in the palm of our hands anymore.
Mm-hmm.
So we want to make sure that we balance that. But the human side is very critical when there's a story behind it. We talked about hardship. We have members that come in, longtime members. We're their main PFI. They've worked with us. They're picking up their phone. They're giving you a call and they're saying, Mike, I'm going through a tough time right now.
Mm-hmm.
How can you help me? And in that moment, we have to be able to sit there in front of that member, help them work through that situation and let them know we still have their back, that they're not just a score, they're not just a transaction. We are there to help them.
Mm-hmm.
So, it gets very dangerous if you lean too far into one direction. Like we said, becomes over automated, becomes transactional.
Yeah.
So we want to make sure we have that goal of we're getting the loans out that are straightforward really quickly, and we still have the time and the efficiency to have that conversation with somebody and say, okay, what's going on? How can I help you? Because I want to be there for you because you've been with me for the 20 years of your membership.
Correct. In terms of skill sets for frontline staff that is working with members, whether that's at the level of addressing questions when somebody comes in and wants a mortgage or a personal loan, and on the other spectrum around member management or member servicing, a difficult discussion around credit restructuring, forbearance, and a workout, right? Now, when you think about skills here in frontline staff, any thoughts around that in how do you think about technology enabling those frontline staff and the right blend of experience, formal education versus or augmented with using agent assist kind of mindsets? Any thoughts around that and how you are approaching that in a prudent, rational, and a cost efficient way for smaller credit unions?
There's a lot of thought. I think
Okay.
as a credit union in general, especially a small one, you do the best that you can for training, but some of the beauty in what we do in lending is everything is different. Each day, you have a different scenario, a different loan. So you can't really say this is a black and white scenario that you're going to have when somebody comes in.
Mm-hmm.
So if you had an opportunity to maybe have AI running alongside, where you can say, all right, this is the situation that we have based on the credit union, maybe from its learning how we operate, this is the direction I would go in with this member, whether that's a personal loan, a home equity line of credit, or maybe it's a cash out refi on their vehicle to
Mm-hmm.
help them get what they need. But having maybe the rudder, right? You don't want a rudderless ship where you're hopeful that that person standing in front of them can give them the best information, but maybe having that guidance or the guardrail set up for them
Yeah.
to put the best loan or the best scenario out there for them.
Correct. Correct. And objectively and kind of a more of a macro picture, how successful has that been, or is this still work in progress from your perspective at Bridge?
So for us, it's a work in progress. We are trying to move methodical through this.
Okay.
We want to make sure that we're making the best decision for the credit union, for our membership, how we balance that, because the people here matter a lot to us. Our employees, our members are very special to the credit union and a big deal to us. So as you go through and you're navigating AI and what direction you want to go in, you have to be mindful of how they're feeling. Everybody right now believes that AI is going to replace them. We don't need them. I know that's not, my mindset's not maybe the same as somebody out
Mm-hmm.
on the front line, but you have to balance that and let them know and understand what you're looking for out of that AI, how it can help them become more efficient and make their life easier, not replace them.
Got it. Got it. Got it. Good. Let's jump to the third questions, and that's, well, in the context of tools. We just talked about that and finding the right blend. So as we think about tool selection, there is a broad thought around chasing the shiny object, which is chasing the rabbit down the hole, that kind of thing, right? So there's an easy trap, so to say, that you could enter, which is credit union sees a peer institution adopt a new platform, and suddenly there's pressure, peer pressure and board pressure to do the same. But getting in the technology for the wrong reasons without forethought around your membership, around your operating model, your values, can just accelerate the loss of the human edge. I would love for you to answer this question in terms of a framework that you would use and kind of what resources would you tap into, including peer group knowledge. But if you so dare, you could also maybe give an example without naming a vendor where you felt that going down a path in a particular area of technology adoption could have been chasing a rabbit or could have resulted in less than good outcome versus what you wanted. It'll be great to get a candid response on this one from you.
Yeah, so the biggest thing is making sure that you're not just buying something because you're afraid of falling behind. Well,
Yep,
everybody's doing it, right? The peer pressure thing.
it's
All
huge.
the credit unions are doing it, the large financial institutions. There are a lot of great companies out there that have been established for a while, but how does it fit us? How does it fit the credit union? How does it fit our vision, our future of what the credit union uh, is going to look like? So we have had several conversations, whether it's with companies that are doing instant decisioning, companies that can do internal knowledge bases, companies that will guide your employees. I think it's an information gathering phase for especially us here at Bridge to make sure, again, that we're not just doing it to do it. Is it solving a problem? What is that problem? How do you find those problems out? You can get any AI you want, but if it doesn't solve a problem, have I wasted money?
Yeah,
And it could be a substantial amount of money. So you have to find where it fits the credit union, where it fits the need. What's the need that it's going to fix or make more efficiently for us, as opposed to throwing money at
got it. Let's double click on a couple of areas there. And this could be learning for folks like myself in the fintech, but broadly for the vendor slash fintech space. So do you think specifically in the area of AI and automation and digitization, vendors fall broadly in these three big buckets? Are is the fintech ecosystem's pricing model today aligned well with smaller credit unions in terms of pricing or pricing commensurate to value or pay as you go models? Do you think we got a we are listening carefully to the smaller credit unions, or do you have an angst against that? And again, be candid.
Yeah, I would say that I don't believe small credit unions are on front of mind of the
Mm,
AI companies.
okay.
Um, I believe they want you to take that risk without adjusting their pricing or their models. They want you to say, I want it. I'm going to take that. I'm going to make that leap into the AI or into your company or your vendor to fix what problem that may be with no real understanding of what a smaller credit union is trying to navigate.
Okay.
I don't believe that. And I'm not saying there's anything wrong with that, right? We all have to make sure we're doing what's best for our company, our financial institution. But the demos and the meetings that you have with each vendor, it's not about the pricing. That's the last thing. And everybody can tell you they can make adjustments. Don't worry about the number you see. We can work on that. Let's watch the show. And of
Hmm.
course, the show is great. The product is great. And I'd be lying to you if I told you AI isn't something that is going to make every financial institution more efficient and better at what they do. But at what risk for a
Yeah.
small financial institution? Because if I miss,
Mm,
what's the impact?
correct.
We miss on the product that we pick. that is a larger impact than the people sitting in that room. There's a larger impact than the person that's on the demo or the company that's pushing the product out. They're probably going to continue on. Does
Right.
it impact us enough that the credit union doesn't continue on? I'm not saying that anybody's going to be wild enough to do that, but if your decision is not right and you're not methodical in it and you are buying that shiny object, the ripple effect of that goes well beyond us and starts impacting other people's lives. And that could be a real problem. And that would be really bothersome to me. So I think, circling back to your question, I think there has to be a better understanding of how those can fit smaller credit unions. And maybe it's not everything. Maybe you break them down, not a la carte style, but it's like a
Mm-hmm.
value menu.
Mm-hmm. Mm-hmm.
And this fit you. Here's a great pricing model for the smaller credit union
Yep.
to become more efficient and then grow. And
Yep.
if you're the one that throws out that line, we talk about the relationships that we have with our members and approving their loans that way. If you throw out that line to that smaller credit union and they're successful and they grow, that's a relationship for life.
That's right.
We're going
Yes.
to come back to you for all the new things that we need.
Correct. That's an excellent point. This has been very insightful, Mike, especially from the vantage of how smaller credit unions can compete in this hustle and bustle of the financial services space and some of the practical advices that you're giving. I want to leave with one last question, which is somewhat impromptu, but it popped in my head. It's related to what we just spoken for the last 15 minutes. And actually, it asked this in my last podcast to about a $5 billion credit union. When you think about shiny objects or relevant technology that you're putting in, one big element of opportunity cost is change management. Change management of your processes is very critical here. Whether that's protocols that you have to adjust relative to members, protocols that you have to adjust relative to your staff as it relates to operations, the way you're going to interact. It's not just putting in the technology, but you're making a lot of tweaks and adjustments you know to really get the value of the technology you put in. But it also means that when your staff walks in on day 2 after deployment, there are certain patterns that are going to switch and change. And just like any other human, including you and I, we take time to adapt and then move to the new normal, which is more efficient. Any thoughts around change management itself for success of any technology transformation?
Yes, probably too many.
Okay.
Um, I think with change management, one of the things you learn, maybe too late at times when you kind of move up through the credit union, is who needs to be involved in that. You have to have the people that are in it, that are doing the work to be part of those processes and the decision making of the change management and the
Yeah.
tool that you're going to use.
Yeah.
Yes, it's going to be different, and changing anybody's mindset and how they operate is going to be different because it's really a mindset
Yeah.
shift. We've been
Yeah.
doing it this way for so long because we were small. We wear many hats. It's different than what I'm used to. But I think if you get the right people in there, understanding who your emerging leaders are, who other credit union employees turn to, and you get their buy-in part of that change management process, it will be successful in getting out to the other employees that I promise you there's going to be some change. It may be difficult, but there is light at the end of the tunnel, and we're going to be better for it.
Correct.
So getting that buy-in from the right people within the credit union and making them part of that process. Because I can make all the decisions, but I don't do it. And I promise you, somebody that doesn't do it isn't going to make the right ones. We're
Correct.
going to do what we believe is the best. And a lot of times, we're probably not right. It's just the reality of it.
Yeah. 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 No, this is very good sage advice from the front line. Mike, thank you for coming on the podcast. Have a good Memorial Day weekend.
I appreciate it. Thank you so much for having me.
Thank you, sir.